What is going on, guys? What is going on? What is going on? Good to see you guys bright and early. Let me say what's up to some of you. What's going on? North Shore Girl already donated $20. Thank you so much, North Shore Girl. I assume that you're in Hawaii or from Hawaii. Surfing Dragon, aloha. What's going on? Here for Jackson Hole. Yes, I'm a little offended. You're not here for me, but yes, you're here for Jackson Hole. By the way, guys, Jackson Hole, the speech starts at 10:05 Eastern, so in 30 minutes exactly. So we're going to go over the markets. We're going to go over the initial response here, and we're also going to go over, and then we're also going to go over the charts. We're going to go over some trades. I've had some questions about Nvidia, which I definitely want to go over because there was a very deliberate way that we played Nvidia. And for those of you on Instagram, guys, I'm on YouTube. So just hop on over to YouTube, click the link in the bio, follow us on YouTube. We are live on YouTube doing live trading and covering Jackson Hole. So if you're on Instagram, make sure that you jump over to YouTube because there's no way for me to share my screen. So we're going to be covering the charts, the markets, and I'm going to tell you what happened last Jackson Hole and why Jackson Hole in general was a non-event up until now. And by the way, if you're hitting the stream right now, just hit that thumbs up so that more people can find the stream. But why Jackson Hole traditionally is a non-event, right? It's not anything that that usually rocks the market. I'm going to go over some data for you showcasing exactly what I'm talking about because it's not something that traditionally moves the market. But because of last year, because of what happened last year with Jerome Powell talking tough deliberately, right? Saying that homes are going to feel the pain, saying that jobs are going to feel the pain. He was talking, if you guys remember, and I covered this in my YouTube video, but if you remember, he was really talking exactly like that. But let's go over in general what happens in Jackson Hole. This data is from Fundstrat/Bloomberg. But if you look, the average move on Jackson Hole Day, on the speech day, if you go back all the way to 1998, the average move is 0%. Let me see if I can pull out a mouse pointer. The average move on Jackson Hole Day is 0%. It's a non-mover. And if you look in the past, it's actually mostly positive the days that we have had moves. And last Jackson Hole was the biggest drop in history, right? Now, obviously, a lot of context is needed for this. Why was this the case? And then I promise I'm going to get into the chat. But why was this the case with last Jackson Hole? Well, let's talk about this for a second. If you guys remember, let me pull up SPX. If you guys remember, right, we were in a bear market. This was last year, okay? So last year, we came from the all-time high, January 2022, and we declined. We started declining because the Fed started raising rates in March, right here, right? And so we declined, and we eventually hit a bear market by the time that July came around. And if you remember that inflation was 9%, inflation was 9% by the time that July came around. A little above 9%, actually. It was closer to double digits. And that's with the new way of calculating inflation, right? Which obviously is convenient. It would have been much higher, honestly. So with that said, we saw a bear market rally, right? This was a bear market rally here. And in August, we had CPI come out. It was still super high. And then Jackson Hole happened right around here, right? And as I was saying on Twitter, by the way, follow me on Twitter and Instagram for free daily trading and finance content. But I was saying on Twitter, I said last Jackson Hole was the start of the most profitable trading streak that I had in 2022. Now, the reason that that was is because if you guys remember, we had this epic trend line here. And for those of you that have been following the channel for a while, I even said, I had a post on Twitter back then, and I said, is it really this easy? We had a trend line. We had, all-time high inflation, or not all-time high, highest since the early 1980s. And then we were coming up on this trend line, and we had Jackson Hole, and the Fed was continuing to raise rates. So we ended up shorting the market and putting on tons of hedges at this trend line. And we did not stop dropping until October. And Jackson Hole really was the precursor to a 19% drop in the market, right? It was literally one of the easiest times to trade that I remember, aside from 2020, 2021, which was the opposite, but in the bull case, right? So that was last Jackson Hole. But in general, Jackson Hole is a non-event. And inflation has now come down from 9% to 3%. And I don't know that Jerome Powell really has incentive. And for those of you on Instagram, join us on YouTube. Join us on YouTube. I don't know that Jerome Powell has incentive to do that. Now, I did mention, and people, were asking me, why is Jerome Powell continuing to raise rates if inflation truly has come down from 9% to 3%? The reason is not because of CPI or core CPI. The reason is because of wages. And they've said it time and time and time again. By the way, if you're on the stream, hit that thumbs up. There's 600 of you here. Hit that thumbs up. Let other people find the stream. But the reason is because of wages, right? It's not because of CPI. It's not because of core CPI. It's simply because of wages. And I'll show you what I'm talking about if I can find the slide that I'm talking about. Yeah. So if you look at wages, everyone's, come on. All right. Everyone's talking about, credit card growth and debt growth and all this stuff, but people don't realize that wages, especially since the pandemic, when, companies were having trouble finding workers. You see here in 2020, right after that, it started shooting up. Wages shot up from May 2021. It was at 3% based on this index, the overall unweighted wage index, all the way up to 6.7% wage inflation. This is exactly what the Fed is going after. This and jobs, right? They're tied hand in hand. Not so much CPI and core CPI, which, if you look at it, is actually coming down, right? Traditionally, the Fed pauses when core CPI and CPI are below now the Fed funds rate, and they both are. Both of them are below the Fed funds rate. The last CPI reading was 3.2. The last core reading was 4.7, right? Both below the 5.25 Fed funds rate. So they are really going after this. And until we see unemployment go up, and until we see wages come down, the Fed is likely going to keep at least talking tough. That is what makes this Jackson Hole extremely interesting. Is the Fed going to use this as an opportunity to talk tough and try to continue to force put pressure on companies, not only in terms of their stock price, in terms of interest rates, until wages finally go down and until unemployment finally goes up? I don't know. Or is Jerome Powell going to see that things have been working from an interest rate standpoint for the most part, as we see inflation coming down, and going to take it easy, right? In my perspective, I do think that, as it relates to the markets, I do think that hold on, guys, on Instagram, I'm going to shut this off, but I'm on YouTube. So follow me on YouTube if you want to catch the rest of the live stream. I cannot screen share on Instagram. So follow me on YouTube, and I'll see you guys there. All right. I do think that this head and shoulders here is going to play out. And by the way, this is a fractal. We've had this already. If you look at Where did this play out? I was looking at this yesterday. We had this in the beginning of the year. We had a head and shoulders here, right? And the head and shoulders, like when you spot it, it doesn't mean that we're going to see an epic drop. Typically, you're going to see a drop below the neckline. So we had a head and shoulders here, right? And then we saw a drop to this support level, right? You see it here. So I do think, and I've been on record saying that I do think 4,200 to 4,300 on the S&P, if we do see a drop, this would be an amazing opportunity and a healthy opportunity for a buyback, or to buy back in, right? And if you take a look at the fib, the golden pocket sits around that 4,200 to 4,300 level, right? So this would be a welcomed opportunity here, to buy back into the market at this level. And I do think there is a chance we get there. August and September are usually pretty bad months. So I would not be surprised. And this huge bearish engulfing candle that we had yesterday, I do think that we're not going to get above this in the next few days. And we could see a drop down to at least 4,300. If not, 4,200 would be amazing, like right around there. Right? So that is essentially what I'm waiting on. Tesla is a beast. Tesla, I do think is at a I sent out an alert a few days ago that I think Tesla right here is at a buyable level for sure. Now, let me say what's up to some of you, because I didn't get a chance to do that. By the way, if you're on this stream, guys, there's 700 of you and 200 likes. Like it doesn't match. It doesn't match. We need people to find the stream so that they're not going on and watching Kramer. Do you want them watching Kramer? Or do you want them watching us? All right. Carlos, Reagan, Tito, what's going on? Good morning, Z. What's going on? Jedgowski, what's going on? Random card breaks. Sonar. Pause It TV. Positive. What's going on? Dallas. John Paul. I used to wear this cologne called Jean Paul Gaultier. It was pretty fire. Nick Kesserling. Always late. Says morning. What's going on? Nasser. Gorilla Trading. Daniel says, Bumbaclot. Aisha, what's going on? Hope everything is well with the family, Aisha. Believe in yourself. What's going on? Greg, Noor, Peyton Graham. Good morning. What's going on? Oscar, Robert Elizondo, Jeff Rux, Christoire. What's going on? Christoire. Let's say it properly. Kenny Harjani from Indonesia. What's going on? Another bull run for Dixie. Yeah, we'll talk about this in a bit. Joe Bathgate, Ophir. What's going on, bro? Last time you mentioned you prefer buying calls on Disney rather than selling puts. Would you mind explaining what the reason is? I didn't say that exactly, but yeah, we'll talk about that. J. Powell freestyle at Jackson Hole. I came to bring the pain, hardcore from the brain. Take the market to the train. John Paul's a fool. Anonymous, whoever that was, appreciate your $5 donation to Maui. Appreciate you. Nice Punisher mug. Holy shit, you could see that? Yeah, bro. That's the Punisher mug right there. There's not much incentive for him to raise or lower rates now. They're going to raise rates, but he can't do it today. It's not a Fed meeting. He's going to raise rates. The difference is it going to be pause in September, raise in October, or raise in September, pause in October? But they'll raise rates one more time. I promise you that. We are stepping stone from all-time highs. Why would he be dovish? Because the stock market is not really what they're looking at. That's why. The stock market, like what happened in the stock market, is just a residual effect of what Jerome Powell is looking at. He's not looking at the stock market saying, I have to bring this down. He's looking at wages saying, I have to bring this down. And in turn, the actions that bring wages down affect the stock market and affect company valuations. Hopefully that makes sense. What's up, Z from Jordan? What's going on? where are you calling? Where are you typing from in Jordan? Where in Jordan are you at? Sup, man? I hope for a DCA opportunity. Well, you had the opportunity on a few stocks. Tesla was definitely at a DCA level for sure, for sure. What Tesla level was that? 215? Yeah, it was a level that it already passed. But yes. Sub Z, RTY doing things again. Yeah, we'll look at RTY. Yaati Abini? What language is that, Tony Hale? Is that some sort of Native American language? I'm not being funny. I'm being serious. Is that Native American? Some sort of Native American language? Let me know. Good morning, Papa Z. What's going on? There's only one Papa today, and unfortunately, his name starts with a J. Papa J. Powell. Katya, what's going on? Kaushik Sitapara. Kaushik Sitapara, what's going on? Are you watching F1 right now? I'm entertaining you. So no, I'm not watching F1. But do I track it? You know what? After one of my good friends from Dubai got me in it last year, we went to F1 in Monza in Italy. It was the 100-year anniversary of F1. So I was actually at the Monza race last year. Luis, what's going on? Thanks for all you do. Gary says. Simon, good morning. RJ, what's good? Chanel Pereira, hello from Sri Lanka. Whoa, is that a Portuguese last name in Sri Lanka? I know they have Portuguese names in India. I didn't know that was a thing in Sri Lanka. Jason Ulysses, top of the morning. Tom S says, yep, smells fire. Oh, you're talking about Jean-Paul Gaultier? Yeah. Bro, it's strong. That's a strong cologne, but it smells really good. It was like Spanish Fly. I used to put that on like half a bottle and go out at night thinking that, it was the secret antidote. Good morning from Orlando. What's going on, Lynn? Wow, good morning from Tennessee. Miles Carter, you guys are active in the chat. I love this. Good morning from Palm Springs, bro. I love Palm Springs. I'm going to retire out there one day. Could you analyze gold? Not again, bro. Sergio, not again. For those of you that remember last live stream, how many people were asking about gold? It seemed like it was a bot. It seemed like it was a bot that was asking about gold. You copping the Cybertruck? Fool, you crazy. No, I ain't copping no Cybertruck. Have you seen Audi's version? We have Jerome Powell in 15 minutes. Have you seen the Audi version of the Cybertruck? It is, oh my God. Like, what the hell, bro? This thing is so beautiful. This thing will probably be like $150,000 though, right? And by the way, I don't know that the Cybertruck is going to come in at $50K. If they do $50K, it's game over. I mean, Tesla's going to 400 easily, especially if they had 1.8 million pre-orders for the Cybertruck. If it comes in at $50K and those 1.8 million orders actually are all filled, my God. Hummus and tabule says FFHD. That's what you're eating right now? Have you seen the Cleveland Fed inflation forecast for August CPI that will be released 9/13? Seems like they're estimating a significant spike. Yeah, I think it was 3.8, Greg, if I'm not mistaken. Wouldn't it be appropriate for wages to go up to catch up with inflation? Wages are so much higher than inflation, according to the Fed. They've already gone up. So now, not only do they want to bring inflation down, they want to bring wages down. Yes. Yes, Navajo language. See, I knew it was something Native American. Dagote says Gooder Joe. Pritham, hey boss. Producer Pike Fire. Good morning, Z. What's going on? Wow, you guys are active here. I love it. Hey from Ecuador. What's going on? Karen Santos, hello from Stockholm. What's going on? Sweden. Check QQQ at a resistance level. Hello from New Zealand. Hello from Atlanta, says Daniel Martin. Kiwi Gamer, what's going on? Ross Roballo, are you Portuguese? Cape Verde in the house. No, I'm not Portuguese. No. Morning Z, Prophet. Hi, called my name, bro. Furkan, what's going on? MTB Thrill Seeker. Wow, so many of you from Austria, Akasis. Wow, Monza must have been an awesome experience. Yeah, it was crazy. Malko says, greetings from Bulgaria. Come on, smash the like button. Yes, smash the like button. Mediterranean food for Papa Z. Shri says, hello from Dallas. All right, I got spooked out of my swing on Tesla last night. My Uber bearishness took an L rather than a W. We could talk about the trade, Christoire, but Cybertruck is hard to manufacture. Volume will be interesting. Yeah. And I'm willing to bet it's not going to come in at 50K. Can you share another Iron Condor opportunity? Hiran says. Hiran, why don't you come through and join the academy, bro? Look, yesterday, we had the 80% on NVIDIA. While everyone was buying calls and puts, our Iron Condor ended up at 80%. Now, this would be amazing on its own, but it followed the Meta Iron Condor and the AMD Iron Condor that I told you both on previous live streams we were going to do before those earnings. And we banked on each of those, Meta, AMD, and NVIDIA. Why? Because the premiums were paying so crazy. And I took a look at the expected move. And the expected move for those stocks on earnings were actually not usually those stocks actually don't meet the expected move. So while everybody is buying calls and puts, both getting crushed, nobody actually takes a look at what is the implied volatility and what is the expected move, right? Nobody takes a look at that. So if you take a look at NVIDIA, for instance, you can see here, it says over 69% of the time, the market overestimates NVIDIA's move, right? So I figured that we would have a muted move because of that. Also, implied volatility was so high that we were getting paid 1-to-1 in order to open up a 25 Delta Iron Condor. Do you know what that means? That means that if you take a bet in Vegas that says there's 75% chance that you'll win if you pick this team, right? But we're going to pay you out 100% of the bet, you would take that bet every single time. So the premiums on NVIDIA were so high, and clowns were out here buying calls and puts, both getting crushed, by the way. Both calls and puts getting crushed. That we were just sitting pretty in our Iron Condor and not really even stressed about it, right? And if you want to take a look at, here, I'm going to show you something. Look at this, right? Because part of the Iron Condor, you're buying, you're buying a call and a put because you're creating a short spread and a short call spread and a short put spread. Look at the puts, right? The put that we bought, the 422.5 put, was down 98%. The 515 call was down 82%. Both calls and puts, if you bought them naked, got absolutely crushed, right? But obviously, we didn't buy them naked. This is part of an entire 4-leg order. But just to show you that if you bought naked calls or naked puts, you absolutely got smashed. And by the way, I'm going to be going over selling strategies in a mastermind, in a free mastermind on August 27th. So make sure it's absolutely free. Make sure that you sign up. We've already had over 1,200 names. We will cap it at 1,500 because we just cannot accept that many people on the Zoom. So we're going to be capping this absolutely free. We're going to be going over how to day trade futures, because that's now the number one question I keep getting asked, and option selling strategies, right? Like, and typically I don't buy naked options. That's a recipe for disaster. If most options expire worthless, right? If over 85% of options expire worthless, why would you buy options? And the market allows you to sell options, which is freaking wild. Why would you buy options? Learn how to sell options. Come and join us here. And if you want access to the academy, if you want access to all of our plays, if you want access to our earnings plays, if you want access to our day trades, make sure that you check out the link in the description. And if you guys ask for it enough, I will create a coupon code for you guys right now and give it to you on the stream. If enough of you ask for it. If we get to 500 likes, I'll do it if you guys want. But a lot of you on the chat already in there already, which, because I recognize a lot of you guys. Signed up for the mastermind, but I haven't received the call. You're not going to get a call. You'll get an email, brother. Hello from Chile. What's going on, Victor? Can you share how to do an Iron Condor on Robinhood? Yes, join the mastermind. But also get off Robinhood. Hiran says, I already joined the community. Thanks for NVIDIA. Yeah, I know that a lot of you guys on the stream are actually from the academy. But if you get this to 500 likes, I'll give you guys a coupon code. Your thoughts on BRICS? I did a whole video on BRICS. I don't think BRICS will be effective in the short term, but it could set the stage for a long-term decline. 50 discount for masterminds? If you join the mastermind, yeah. Coupon code will be solid. All right, get this to 500 likes. You guys have 122 more likes. Can you do a one cheap monthly for some of us to test? Bro, I literally opened up 50% off for an entire week and a half. 50% off. And it was 50% off for 3 months, not only 1 month. So, yeah. All right, let's take a look at the markets. Let's see if we can find day trades. All right, one of our analysts already sent out a trade. Would love a false move up on NQ with confirmation of reversal. If we take a look here, and by the way, yesterday I also opened up a call spread, a short call spread on the S&P 500 on SPX. We opened up SPX call spreads that we closed for 80%. We opened them from this retest level here to fill this gap, and we ended up filling this gap towards the end of the day. Now, right now, see, this is what worries me here. This is what worries me here. So we gapped up on the open, right? To me, unless Jerome Powell definitively says we're pausing in September or October, or we'll have one more rate hike and that's it, this gap will likely get filled, and we have a low here from August 21st. We have a low here from August 21st. So this could be a trap for sure, like the gap up. I do want to see significant liquidity taken here. Like we will probably see a spike up. Jerome Powell talks in 4 minutes, by the way. So we will likely see a spike up. And if the market interprets his comments as hawkish, we will likely take out a high, either this high or this high. And then I will likely be looking for downside moves. So let's see. Let me open up CNBC right now. All right. We got it up. Let's pop it out.
Mostly hawkish, saying that the Fed is prepared to raise rates further if appropriate, and saying that he intends to hold policy at a restrictive level until we're confident that inflation is moving down. He says it's the Fed's job to bring down inflation. Quote, we will do so. Although he says inflation has moved down, it remains too high. He says we are in a position to proceed carefully and assess incoming data as it's evolving. Finally, he expresses some doubt about the recent decline in inflation, says even with more favorable inflation numbers, the process is still has a long way to go. 2 months of good data are only the beginning. And he goes on, guys, to say that he's concerned that inflation that the economy may be too strong right now. Let's listen to the Fed chair.
I will conclude with a summary of what this means for policy. Given how far we have come, at upcoming meetings, we are in a position to proceed carefully as we assess the incoming data and the evolving outlook and risks. The ongoing episode of high inflation initially emerged from a collision between very strong demand and pandemic-constrained supply. By the time the FOMC raised the policy rate in March 2022, it was clear that bringing down inflation would depend on both the unwinding of the unprecedented pandemic-related demand and supply distortions and on our tightening of monetary policy, which would slow the growth of aggregate demand, allowing supply time to catch up. While these two forces are now working together to bring down inflation, the process still has a long way to go, even with the more favorable recent readings. On a 12-month basis, U.S. total or headline PCE inflation peaked at 7% in June 2022 and declined to 3.3% as of July, following a trajectory roughly in line with global trends. The effects of Russia's war against Ukraine have been a primary driver of the changes in headline inflation around the world since early 2022. Headline inflation is what households and businesses experience most directly, so this decline is very good news. But food and energy prices are influenced by global factors that remain volatile and can provide a misleading signal of where inflation is headed. And in my remaining comments, I will focus on core PCE inflation, which omits the food and energy components. On a 12-month basis, core PCE inflation peaked at 5.4% in February 2022 and declined gradually to 4.3% in July. The lower monthly readings for core inflation in June and July were welcome, but 2 months of good data are only the beginning of what it will take to build confidence that inflation is moving down sustainably toward our goal. We can't yet know the extent to which these lower readings will continue or where underlying inflation will settle over coming quarters. 12-month core inflation is still elevated, and there is substantial further ground to cover to get back to price stability. To understand the factors that will likely drive further progress, it is useful to separately examine the three broad components of core PCE inflation: inflation for goods, for housing services, and for all other services, sometimes referred to as non-housing services. Core goods inflation has fallen sharply, particularly for durable goods, as both tighter monetary policy and the slow unwinding of supply and demand dislocations are bringing it down. The motor vehicle sector provides a good illustration. Earlier in the pandemic, demand for vehicles rose sharply, supported by low interest rates, fiscal transfers, curtailed spending on in-person services, and shifts in preference away from using public transportation and from living in cities. But because of a shortage of semiconductors, vehicle supply actually fell. Vehicle prices spiked, and a large pool of pent-up demand emerged. As the pandemic and its effects have waned, production and inventories have grown and supply has improved. At the same time, higher interest rates have weighed on demand. Interest rates on auto loans have nearly doubled since early last year, and customers report feeling the effect of higher rates on affordability. On net, motor vehicle inflation has declined sharply because of the combined effects of these supply and demand factors. Similar dynamics are playing out for core goods inflation overall. As they do, the effects of monetary restraint should show through more fully over time. Core goods prices fell the last 2 months, but on a 12-month basis, core goods inflation remains well above its pre-pandemic level. Sustained progress is needed, and restrictive monetary policy is called for to achieve that progress. In the highly interest-sensitive housing sector, the effects of monetary policy became apparent soon after liftoff. Mortgage rates doubled over the course of 2022, causing housing starts and sales to fall and house price growth to plummet. Growth in market rents soon peaked and then steadily declined. Measured housing services inflation lagged these changes, as is typical, but has recently begun to fall. This inflation metric reflects rents paid by all tenants, as well as estimates of the equivalent rents that could be earned from homes that are owner-occupied. Because leases turn over slowly, it takes time for a decline in market rent growth to work its way into the overall inflation measure. The market rent slowdown has only recently begun to show through to that measure. The slowing growth in rents for new leases over roughly the past year can be thought of as in the pipeline and will affect measured housing services inflation over the coming year. Going forward, if market rent growth settles near pre-pandemic levels, housing services inflation should decline toward its pre-pandemic level as well. And we will continue to watch the market rent data closely for a signal of the upside and downside risks to housing services inflation. The final category, non-housing services, accounts for over half of the core PCE index and includes a broad range of services, such as healthcare, food services, transportation, and accommodations. 12-month inflation in this sector has moved sideways since liftoff. Inflation measured over the past 3 and 6 months has declined, however, which is encouraging. Part of the reason for the modest decline of non-housing services inflation so far is that many of these services were less affected by global supply chain bottlenecks and are generally thought to be less interest sensitive than other sectors, such as housing or durable goods. Production of these services is also relatively labor intensive, and the labor market remains tight. Given the size of this sector, some further progress here will be essential in restoring price stability. Over time, restrictive monetary policy will help bring aggregate supply and demand back into better balance, reducing inflationary pressures in this key sector. Turning then to the outlook, although further unwinding of pandemic-related distortions should continue to put some downward pressure on inflation, restrictive monetary policy will likely play an increasingly important role. Getting inflation sustainably back down to 2% is expected to require a period of below-trend economic growth, as well as some softening in labor market conditions. Restrictive monetary policy has tightened financial conditions, supporting the expectation of below-trend growth. Since last year's symposium, the 2-year real yield is up about 250 basis points, and longer-term real yields are higher as well by nearly 150 basis points. Beyond changes in interest rates, bank lending standards have tightened and loan growth has slowed sharply. Such a tightening of broad financial conditions typically contributes to a slowing in the growth of economic activity, and there is evidence of that in this cycle as well. For example, growth in industrial production has slowed, and the amount spent on residential investment has declined in each of the past 5 quarters. But we are attentive to signs that the economy may not be cooling as expected. So far this year, GDP growth has come in above expectations and above its longer-run trend, and recent readings on consumer spending have been especially robust. In addition, after decelerating sharply over the past 18 months, the housing sector is showing signs of picking back up. Additional evidence of persistently above-trend growth could put further progress on inflation at risk and could warrant further tightening of monetary policy. The rebalancing of the labor market has continued over the past year, but remains incomplete. Labor supply has improved, driven by stronger participation among workers aged 25 to 54, and by an increase in immigration back toward pre-pandemic levels. Indeed, the labor force participation rate of women in their prime working years reached an all-time high in June. Demand for labor has moderated as well. Job openings remain high but are trending lower. Payroll job growth has slowed significantly. Total hours worked has been flat over the past 6 months, and the average work week has declined to the lower end of its pre-pandemic range, reflecting a gradual normalization in labor market conditions. This rebalancing has eased wage pressures. Wage growth across a range of measures continues to slow, albeit gradually. While nominal wage growth must ultimately slow to a rate that is consistent with 2% inflation, what matters for households is real wage growth. Even as nominal wage growth has slowed, real wage growth has been increasing as inflation has fallen. We expect this labor market rebalancing to continue. Evidence that the tightness in the labor market is no longer easing could also call for a monetary policy response. Turning to the path forward. 2% is and will remain our inflation target. We are committed to achieving and sustaining a stance of monetary policy that is sufficiently restrictive to bring inflation down to that level over time. It is challenging, of course, to know in real time when such a stance has been achieved. There are some challenges that are common to all tightening cycles. For example, real interest rates are now positive and well above mainstream estimates of the neutral policy rate. We see the current stance of policy as restrictive, putting downward pressure on economic activity, hiring, and inflation. But we cannot identify with certainty the neutral rate of interest, and thus there is always uncertainty about the precise level of monetary policy restraint. That assessment is further complicated by uncertainty about the duration of the lags with which monetary tightening affects economic activity and especially inflation. Since the symposium a year ago, the committee has raised the policy rate by 300 basis points, including 100 basis points over the past 7 months. And we have substantially reduced the size of our securities holdings. The wide range of estimates of these lags suggests that there may be significant further drag in the pipeline. Beyond these traditional sources of policy uncertainty, the supply and demand dislocations unique to this cycle raise further complications through their effects on inflation and labor market dynamics. For example, so far, job openings have declined substantially without increasing unemployment, a highly welcome but historically unusual result that appears to reflect large excess demand for labor. In addition, there is evidence that inflation has become more responsive to labor market tightness than was the case in recent decades. These changing dynamics may or may not persist, and this uncertainty underscores the need for agile policymaking. These uncertainties, both old and new, complicate our task of balancing the risk of tightening monetary policy too much against the risk of tightening too little. Doing too little could allow above target inflation to become entrenched and ultimately require monetary policy to wring more persistent inflation from the economy at a high cost to employment. Doing too much could also do unnecessary harm to the economy. As is often the case, we are navigating by the stars under cloudy skies. In such circumstances, risk management considerations are critical. At upcoming meetings, we will assess our progress based on the totality of the data and the evolving outlook and risks. Based on this assessment, we will proceed carefully as we decide whether to tighten further or instead to hold the policy rate constant and await further data. Restoring price stability is essential to achieving both sides of our dual mandate. We will need price stability to achieve a sustained period of strong labor market conditions that benefit all. And we will keep at it until the job is done. Thank you.
That is the Fed chair finishing up his speech at Jackson Hole, prepared to do more, but we'll proceed carefully if we do. No change to the target. 2 months of cool data, only the beginning of what it'll take to build confidence. Market is fairly constructive on it. NASDAQ up more than 1%. Steve Leisman, Bob Pisani, David Kelly here to break it down. Steve, your thoughts?
You know, I thought he was relatively hawkish, though he could have been more so. I think he doesn't necessarily have an itchy finger to hike, but he kind of put us on notice that if a couple things, several things, including one new one, move the wrong way, he would be prepared to do so. That new thing is talking about the economy potentially running hotter than expected. He says if that persists, that could be a reason to hike. If the labor market doesn't cool down, that could be a reason to hike. He threw some cold water on the recent inflation progress, saying it was not enough. It was only 2 months. We can't be sure it's not going to go away. There were a few things in there for the doves about some of the progress on inflation, some of the easing in the labor market. But you'll notice a couple things he didn't say. He didn't talk about the word, he didn't say the word cuts. That's not in the forecast. The choices he faces are to hike more or essentially to stay on hold at a restrictive level. Also didn't say, and David Kelly mentioned this before he spoke, and I thought I might hear this phrase. He didn't talk about risks being balanced. Maybe he sort of talked about a world in which risks are more balanced than they were, but he didn't use that phrase explicitly. So I would say he's definitively on hold, but kind of leaning towards a more hawkish stance if the data does not continue to break the way it's been breaking.
I'm up 700
didn't
on
use the word
short.
pain either.
Right
Would you
after
agree
he's
it's a
talking.
net hawkish speech?
Yeah, I would. I mean, I thought I think his
We're
reading
up.
of core services inflation ex housing is really
might
interesting
flatten
because as
this,
we
but
look at
we're
these
up
numbers,
700
a
on
lot
this.
of this is actually the lagged effect of higher vehicle prices, which have pushed up auto insurance,
Oh, my
which
God.
pushed up auto repair and pushed up auto leases, and a big chunk of it is that
800
it's not really higher
up
wages.
887, up 900
and so
now.
I think he's just misreading this. He's got this idea that high wage growth is actually going to cause inflation.
I might flatten this. All right, just booked 900 on that short from the top. Nice. I shorted this fair value gap here. Like I said, I think that if you rewind the tape, like I said, I was waiting for us to break these highs or these highs, and we will see a spike up while a few, you can't hear me? Oh, I was saying that please mute them before you open your position. Bro, we do this every single day. We do this every single day. Just like I said, a lot of you sometimes complain that, you know, it's too expensive to pay like $125 a month or whatever, but one trade, like we just banked 900 on one trade, and I can appreciate that. And that's why, like I said, I will give you guys a coupon code if you get this to 500 likes. We're 7 away, but we just banked 900. Leonardo says looks half asleep. Well, if I can make $1,000 looking half asleep, bro, what can you do? You know, it's so funny that when he starts talking, people are saying, why is the market going up? Why is the market going up? Like I'm reading the chat here. And I could see a lot of you guys panicking. Not even panicking, but kind of complaining, like, why is the market going up? Oh my God, like the market doesn't care. This is a nothing burger. This is dovish. Why is everything green? If you guys rewind the tape, be patient. Be patient. Like I said, we're going to break a high, right? You can rewind the tape. That's what I said at the beginning. Joe was listening because I know he took a trade. And I said, we're going to break a high, and then we will likely come back down and try to fill this gap. That's exactly what I said, right? And how do I know which high it is? Well, it's just based on a previous high. Liquidity concepts are super easy. You don't need trend lines or crazy patterns. All you need is a solid understanding of horizontal lines. That's it, right? We had this fair value gap here, and we had a high here and a high here. So I said, we need to break one of these highs. I don't know which one, but I'm waiting, right? Jerome Powell's talking, and I'm waiting. We ended up breaking this high. So now we're looking at this fair value gap as well, a potential point that we're going to get stopped at. And that was it. Plus, you have, you know, even if you're not a fair value gap trader, you have a huge block of orders here, right? Which would likely serve as your supply zone if you're a supply or demand trader. There isn't like a perfect strategy in my eyes. It's just all how you read the market, right? Like whether you're trading supply and demand, whether you're trading fair value gaps, whether you're trading liquidity. The stuff is not that complicated once you get acquainted with it and do it over and over and over again every day. Then you'll be able to read the market. Like I'm not Nostradamus, so how did I know that we'd take out a high and then violently cliff dive below back to try and fill this gap here, right? It's just experience. It's nothing crazy. And that's exactly what happened. We spiked above a previous high, and now we are going to fill this gap, or threatening to fill this gap, right? So bears are patient. Yeah, I'm not even a bear of PHX. Like if it was the opposite PHX, if we were sweeping liquidity from the sell side, right? Like if we were sweeping liquidity from here, I would be bullish. It's not like I'm bearish because of Jerome Powell. I'm just day trading what the market is giving us. And when I saw that setup, it was clear to me that we were going to head for liquidity to take all of this liquidity, right? Before coming back down to fill this gap. It was pretty easy for me to read in that case. I didn't take profits. Bro, we're still going down. What you mean? You have an opportunity to take profits right now. Is it a good time to short? Marianne, it's a bit too late for that. You have an opportunity to take profits here, bro. What are you talking about? So Z's saying prices will go up for now, then down again today. New breed. It's not that. It's not that that rudimentary. Prices will go up, then go down. It's not like look at specific levels, right? I'm paying attention to specific levels. I'm not arbitrarily saying prices will go up, then go down. I'm looking at it at an exact level here, right? This right here, this gap, these have prices. And what I said, what I thought would happen is what happened, right? Like these things, if you're looking at an intraday chart, these things happen. If you're looking at a 1 minute or 3 minute chart, like these things happen, and they look like big moves. But in hindsight, or not hindsight, but if you look at it at an overall, if you look at the overall market move, right, the market is only up 0.2%. So if you're just looking at the daily and you're like, oh, wow, the market is only up 0.2%, that's kind of flat. But if you're a day trader and you're looking at a 1 minute chart, you're looking at what looks like a huge move because you're looking at 1 minute candles. So careful when you're talking in generalities like, oh, price will go up, then go down. Yeah, on the surface, if from a high level, it might look like just a 0.2% move or less. It might look like a flat day, right? If you're just looking at the aggregate number of is the S&P 500 up or down. But when you're looking at the 1 minute chart, you see a huge move up, liquidity grab, a huge move down, or what looks like it, right? This is where you're making your money as a day trader, right? So I hope that makes sense. Did you send some kind of alert, Eduardo? Like, we were watching the stream, so my audio was off, but I was tracking it on the chart. Like, I appreciate the stuff is not easy. It's hard. I'm not trying to say day trading is easy. It takes a lot of patience and a lot of practice and a lot of experience, right? But once you get there, reading days become a lot easier, right? Like, again, am I Nostradamus? Like, why did I think we would spike up and then fill the gap? It's just based on the setup it gave me and based on the fact that I've seen this over 2,000 times before, right? Much more than that, actually. 10 to 3, over 30,000 days trading, right? I've seen this. So, sorry, over 3,000. So with that said, what I lost my train of thought. What was I going to say? Oh, with that said, yeah, I was just saying what I think would happen, right? It's up to you to create your own setup. Now in the academy, like when we send out day trades in the academy, yes, there are specific entries and exits. Like you see the stop loss and the profit taking, right? But when I'm on live stream, I might call a setup out, and if we're watching, a live coverage of something, I might not have time to type out an alert for you or whatever. But if you are a little bit experienced, then you'll know what to look out for. Use the 1 hour chart? No, not when day trading. Not when day trading. Oh, you guys got this up to 600 likes. Okay, I got to do a coupon code for you guys. Z's on beast mode, almost 1K, half asleep. I know, man. Someone was, John, what's going on, bro? I didn't even know you were on the stream. John, appreciate you, man. Thank you for donating to Maui. And I'm going to match your guys' donation, especially after that trade. I'm going to match your guys' donation. This right here is what Z's preaching will never be explained by any other YouTuber. Thank you, Omar. I appreciate you, man. Some of you aren't in the Traveling Trader Academy, and it shows. Amazing trade with Z, 10-minute workday. John, facts, bro. Facts. We all start somewhere. Like I was obviously there at one point in time, right? But I promise you, if you put in work, and it takes years, okay? I'm not going to be that person that tells you, oh, it's super easy, you're going to be able to do this and go golf. If you just join me by next week, you'll be able to do this and go golfing. No, it takes years. Just like anything, I respect all of your guys' professions, whether you're industrial workers or truck drivers or doctors or accountants, or you work in the creative space, whether you make movies, whether you're a music producer, whether you're a software engineer. Think of any of your jobs, right? And someone telling you, oh, I can do that. And if I just train for a week, I can do that. No, most things that have a high reward are going to require a shit ton of effort. So I'm not going to sugarcoat it and say that it's easy. It isn't. But it is possible, I promise you, if you put in the work. Some of you guys on the chat here have been with us 4 years, and you can attest to this. Kaden says, yay, coupon code. Yes, I will drop it for you right now. And I'm going to delete it after the stream, by the way. Let me do this right now. Hold on. I'm going to do this right now, and then I will delete it after the stream. 1 second, because I will keep my promises. What should we call this? We should call this Jackson. We'll just call it Jackson. For the first, you know what? I'll make this coupon last forever, as long as you guys want it to. I was gonna cap it at a month or something like that, but and I'm gonna make it expire by the end of today. All right. Cool. And whether you choose the annual or the monthly, it's going to apply. Done. Use code Jackson. Can I have only Discord access again? Yes, this will give you only Discord access. This is not, you won't get access to the mastermind, which We are dropping, by the way, and we are relaunching the mastermind, all brand new in September. But it won't give you access to that. But yes, you'll get access to the Discord. It's literally our lowest ticket offer. Use code Jackson. There. Is now a good time to take 50% profits? Jacob says, no, Jacob, you take 100% profits. We completely filled the gap. We completely filled the gap. Whoops. How would I technically speculative bounce up? You don't want to do that, Paulo. You can't just short and long and short and long. You don't want to do that, okay? You want to wait until... Now, we could bounce up from this gap here, but we could also take out these previous lows that we created in the after hours yesterday, right? And if we go to electronic trading hours, not RTH, you can see that actually this, I think that here is scalpable. I wouldn't bet on a broad-based moved up from here. But what I want to see really before a broad long is I want to see these equal lows taken out, right? I want to see these equal lows taken out. And then I'll think of a real long, like a thousands of dollars per contract type of long, right? That's what I want to see taken out, these equal lows here. So it would be 43.79-ish on the S&P 500 futures on ES. And by the way, so far it's a flat day if you're looking overall, right? 43.7850. Yeah, we're thinking of the same level. Anis, we're thinking of the same level. Which one is the link? It's the first link in the description, guys. And it's going to expire today. I'm going to delete that code today. So if you want it, take advantage of it. Did you put a stop limit on ES when you executed a trade today? Yes. Very good question. My stop limit on ES. Let me go to RTH. Hold on. My stop limit on ES was above. So we had these series of fair value gaps here. Right? And we had this high, which I said, watch out for one of two highs to get taken out. We were either going to take out this high or just this high. We ended up taking out this high. And once the price started moving up and wicking into these fair value gaps, this is when I took a short. Right? Now, I should have left it open to fill the entire gap as I thought it would. But essentially, my trade looked like this. There was the stop. And like I said, I should have kept it open for almost a 5-to-1 trade. I ended up closing it. I ended up closing it here for a 3.7-to-1 trade. Right? And even if you just shorted it till VWAP, you're still at a 2.7-to-1 trade. So risk reward looks good all over. Whether you took profits at VWAP at previous lows or you waited until it filled the entire gap, you're at above a 2.7 to 1 trade. Guys, please stop asking about the code. I dropped the code. The details are there. Use it. Meet Kevin stream has 13K viewers. Bro, Meet Kevin. I don't know. Let me hold my tongue. Whether it provides value or not, I don't know. It's up to you guys to decide. Whereas I'm going to try to teach you how to fish. All right. Now, we didn't even really talk about what went on. We didn't even profit on puts, Joel says. Amazing, bro. Talk shit about Meet Kevin, please. No, I'm not going to talk shit. One, I'm not very familiar with them. And two, like, I don't watch his content a lot. And two, I have no reason to talk shit about him. I'm just saying, whether he provides you value in terms of, you know, how to trade in every market direction. I mean, he's not a trader, so that's unfair, right? He's not a trader. But I do have a problem with YouTubers in general that, you know, will say, and this is not just Meet Kevin. I mean, you can think of a number of people that fit into the spot, right? Where they'll say, oh, I put $100,000 in this really shitty stock. Now, of course, everybody has a responsibility of their to manage their own money. Like, you shouldn't be following just anybody. You shouldn't even be following me blindly, or anyone, right? Like, learn how to sharpen the tools yourself. But you know, I do have a problem with people saying I'm dumping more money in this stock and more money in this stock and more money in this stock, without really any. It looks like there isn't really any regard for, or maybe even knowledge or know-how, right? But there isn't really any real analysis going on if you're going to make a very significant percentage of your portfolio tattooed chef, for instance, right? As opposed to just saying, guys, like, when people ask me about investment questions, you guys know, what do I tell them? I said, my investing strategy is super boring. Like, I'm not going to tell you this is the next banger, like Palantir is the next banger. You know, I'm not gonna pick a stock that's very speculative and say this is half of my portfolio. I'm a very boring investor, and I say, like, stock picking is a waste of time, in my opinion, in my humble opinion. Stock picking is an absolute waste of time, because you already have indices, S&P 500, QQQ. Yes, obviously some stocks will outperform those, right? Like, Apple is my biggest holding, but Apple is still a blue chip mega cap. It's not anything really novel, right? It's not anything unique. It's Apple. But I'm not going to spend time trying to pick stocks that are speculative, where I'm forecasting that it's going to be bigger than Microsoft in the future. Like, I don't care about that. I think it's a waste of time. I think my investing is really boring, because I'd rather spend much more time learning how to trade, whether it's opening up neutral strategies, bearish strategies, trading futures, trading options, you know, trading index options, etc. Like, that stuff takes so much time that I don't care to think about investing. I just invest in mega caps and indices, and that's it. That's it. I don't try to stock pick, right? Hang out with Z if you want to learn how to fish. Appreciate you, KP. Thank you, man. No comparison at all. How do you find futures on the TD app? You need to be approved to trade futures, Rohan. So you need to apply. First of all, you need a margin account to trade futures, and you need to apply to trade futures. You need to be approved, right? Now, here's the crazy thing about futures. What's crazy about futures is it's tax advantaged. Only 40% is considered short-term capital gains. 60% of futures, even in a day trade like the one I just did now, is considered long-term. So you're taxed at a much, much lower rate. There's no pattern day trading rule, right? Where with options, if your account is less than 25,000, with options, you're only limited to 3 day trades a week, right? In futures, you're not limited to those, right? It's open 23 hours a day, 6 days a week. And it's absolute pricing. So with options, you're subject to time decay. You're subject to Greeks. You're subject to expirations. You're subject to implied volatility. You're not subject to any of that stuff with futures. It's just literally, this is the price. This is the price I'm getting out. This is the price I'm taking profit. There's no lopsided pricing, right? So there's so many advantages to futures. Now, I love options because it allows you to trade neutral strategies, and it allows you to do selling strategies. So you can sell cash secure puts, you can sell covered calls. And for those of you that are just joining, I'm doing a free mastermind on August 27th. And we're going to be covering mostly futures trading and option selling strategies, right? We're going to be covering those two things, and it's absolutely free. We have 1,200 people on the wait list. I don't know, maybe even more now that some of you guys signed up, but we're going to cap it at 1,500. It's this Sunday, August 27th. Absolutely free. You don't want to miss it. So make sure you secure your spot, and you will get the recording thereafter. Which one of your resources should I sign up for as a 6-figure funded futures trader? Up to you, bro. It's really up to you. I mean, we're relaunching the mastermind in September. And if you want to access the mastermind, right, all the previous ones, all the previously recorded ones, and all future ones, and you want lifetime access to the Discord, then book a call and apply to the full academy. Otherwise, the monthly is the cheapest ticket to get in. But we do have quite a few traders now that are going the funded route, including one of our analysts who she trades mainly on funded accounts on Apex. But yeah, I'm personally not a funded trader, but we have quite a few students that are actually doing funded trading and doing trade copying as well, right? Like you see here. And we just had somebody that passed their evaluation too. I'm trying to find it. First Apex payout. This member had their first Apex payout of $2,000. So, you know, we do have traders in here that are funded. I'm personally not funded. I see no problem with it though. Why not go get funded? Because I don't need it. To be honest, conscious investing. I like to trade with my own money. To be honest, but it doesn't. I see no problem with it. Like maybe when I was first starting out, maybe see we're taking out these lows. This is why I said don't go long yet. When I was first starting out, maybe funding would have been awesome, right? Like when I was first starting out trading derivatives seriously in 2010, if we did have something called funded trading, I would have taken advantage of that. But at this stage in my life, I personally don't feel the need to go the funded route. I just trade my own funds. It's nice to have in your back pocket. Yeah, bro. Yeah, for sure. Like I said, I see nothing wrong with it, man. You'll get no argument from me. All right, that's free fall. No, that's not a free fall, bro. You have to learn how to contextualize this stuff. This is what we were waiting for, right? Again, rewind the stream. I said you want to wait to see these lows get taken out, right? Isn't that what I said? And again, I'm not Nostradamus. This is just years of reading price action. I said we're going to break above these highs. We're going to wick above. We're going to come back down, fill the gap. And now we are waiting for these lows to get taken out. You can rewind it. It's all on record. Wonder how funded traders get taxed? Oh, fuck. That's such a good question, Abraham. Whoa, that's such a good question, bro. Because, yeah, even if you're trading futures on funded accounts, is it taxed the same way? How did you know we break these lows? Somebody tell Carter. How did I know? Honestly, bro, like it's just experience, man. It's just experience. There's no other way for me to put it. Like obviously I don't have a time machine. It's just when you have equal lows like that. Okay, here, I'll tell you this right here. When you have equal lows, right? Like this, what are most traders going to do here? When it comes here, most supply and demand traders, right, or support and resistance traders are going to try to buy this for a bounce up, right? So if you are an institution, what is your goal? Your goal is to see if anyone has a bunch of stops here. Because if people have a bunch of stops here, then you can take that as liquidity for a potential move up. If everybody wants to go long here, where are institutions going to find their liquidity? They know that all of retail who are, poor supply and demand traders or support and resistance traders, which is why I'm not a fan of supply and demand trading. They know that all of their sell stops are here, right? If you're going to go long here, right, you're going to put a stop limit somewhere here. You're going to go long here, put your stop limit here. What is a bank going to do? They're going to look at this like, oh, shit, we have equal lows here. Retail traders are going to think, oh, this is a triple bottom, and we're going to go long here, right? And all of their poor stop limits are here. So they're going to target where they think all those stops. And it's a misconception. They cannot see your stops. But it's pretty easy. If I can suspect where stops are, think of what an institution with powerful algorithms can do, right? So all of the stops occur here. So likely these lows will get taken out. That's why. They know. No, they don't know, Fletch. Clickster, I've been paper trading for a month now and tried trading with my actual money this morning while listening to your stream. I'm up 12.20 and may be done for the day. Dude, if this is your first day and you're up 12.20, for sure be done with the day, bro. Go relax. Go relax. And Clickster is part of the academy too. Go relax, bro. 1,200 on the day? That's insane. Go hang out with the family. Go relax, bro. Do a barbecue. And congratulations. What benefits the institution gets if they stop us out? They get your liquidity. They get all of your liquidity, bro. Like they get whatever it is they're trading, they get it at a discount. Right? That's what it is. All right. Now, if you were short, I would take profits. Not that we can't go further, because now you're going to have to zoom out and see, is there more liquidity? And by the way, I do want to get into what Jerome Powell said. We didn't even talk about that because we're busy trading, but you do have lows here too. Right? This is from Monday. These are the weekly lows. This right here is the weekly low. And technically, we did go below it, but we could. The market could be seeking more liquidity down here. So this is the weekly low right here, and this is last week's low, by the way, from Friday. But I want to see at least this week. I want to see these weekly lows taken before even thinking of longing. What plan do we get to trade live with you daily? You could just get them monthly, bro. You won't get access to the masterminds, right? Like if you want access to all of the masterminds for free, all of the past ones, all of the future ones forever, then sign up to the academy and apply, right? It's probably the third link below the description. But if you just want the bare bones access to our trades in the chat, you can sign up to the monthly and then decide later if you want to join the mastermind. Do you see us breaking 4,100 in the next few weeks? That's a bit below my target. I did a write-up here, which was, a few weeks ago now. So I can share it with you since it's old. But this is my target right here for the S&P 500. Between 4,200 and 4,300. So you have this major trend line. You have the golden pocket. And this line here is called the point of control. This, if you go back 2 years, this is where most of the volume is at on the SPX. So you know that institutional volume resides around the 4,200 level, right? But this would be a gift. This would be an absolute gift to get to that level. I don't, below 4,100 is tough. Below 4,100 is tough. There would have to be a major credit event, in my opinion, which can happen, but that's something we cannot predict. No more trades from you today, Joel says. Well, congrats, bro. Congrats. And by the way, I'm going to cancel that coupon code at the end of the stream. So if you want it, make sure that you take advantage of that. All right. So let's see what happened with yeah, we're going for those weekly lows. See this line right here? This is the weekly low. I want to see that get taken out. And then I'll set up a next trade. Where do you think the market is going next? Bro, I just went over this. All right. I'm going to close out with this here. And I'm going to match your guys' donations to Maui. So appreciate you guys donating to Maui. I'm going to match that for sure after the stream. If you want to see me match the donations, follow me on Instagram. I'm going to post a video about it. Guys, 2 more likes and we'll get to 700. Hit that like button so that other people find the stream, because it works even after the stream is done. It allows people to find it. So here's what Jerome Powell said. He said inflation is too high. We're prepared to raise rates further, right? You guys saw him. Now, he didn't say we're going to bring the pain to families. We're going to bring the pain to households and jobs, right? He basically reiterated in a very serious tone without taking questions. Reiterated what he's been saying, right? But if anyone was looking for a dovish tone in terms of when they're going to stop raising rates, he said that they're prepared to raise rates further, and it's going to be data dependent, right? He also said that we have a strong economy and decelerating inflation, which will give the Fed room to proceed carefully, right? And he warned that additional interest rates could be yet to come. So there, in my view, there was nothing dovish. Just more of the same in a firm tone, with resolve, looking to continue their fight against inflation, and says that they could raise rates. He says the lower monthly readings for core inflation in June and July were welcome, but 2 months of good data are only the beginning of what it will take to build confidence that inflation is moving down sustainably toward our goal. Doing too little could allow above target inflation to become entrenched and ultimately require monetary policy to bring more persistent inflation from the economy at a high cost to employment. So that was a little hawkish, right? And remember, what did I say before the stream, or the beginning of the stream? I said that he is going after employment. It's not CPI. It's not just CPI. It's not just core CPI. He's going after unemployment, right? Amazing Discord, bro. Definitely consider upgrading my membership. Appreciate you, Rohan. Thank you so much for being a part of it, man. You guys are what makes running the community enjoyable. And I mean that sincerely. 3,000 profit on put now. Tuna or Tuan. Oh, fuck. Bro, I didn't mean to call you Tuna. I swear to God, I was dyslexic on reading your name. The poor guy's name is Tuan, and I called him Tuna. Oh, my God, bro. I'm sorry. To be fair, if you swap the A and the N, it would be Tuna. Like, tell me that you guys didn't think that. Oh, fuck. It's okay, bro. I'm happy today. Give him a free hat. That's a good proposition. Twan, bro, I'm gonna give you a free hat because random card breaks is vouching for you. All right. Hit me up on Instagram, bro. I promise. I'll send you a free hat. I'll get your info and I'll send you a free. Oh my god, bro. I apologize. I apologize. Hit me up on Instagram. All right. Link is in the description. And I'll give you a free hat. 3,000 and a hat. That's a good day. Christophe says yes. That's a good point. Regine is cracking up. What's going on, Regine? All right. Anyone can hit you? Hit me. Bro, if you try to hit me, I'll slap the taste out your mouth. What you mean anyone can hit me? No, bro. I mean, unless we got boxing gloves on, then yeah, we can spar. We can friendly spar. All right. As is often the case, we are navigating by the stars under cloudy skies, Jerome Powell says. So I particularly, oh, you know what? Let's see what the Fed funds rate are saying. Hold on. FOMC watch tool. You can call me Blobfish for for a hat. Fuck me. All right, let's see what the watch tool says. All right. So the watch tool currently, wow, this is so interesting. Oh, this might change things, guys. In September, the next Fed funds the next FOMC meeting is September 20th. The watch tool, the bettors, the Fed funds futures traders actually have the Fed pausing in September. Sorry, code Jackson is for what? You get a discount off the monthly or the annual. It's the first link in the description. But I'm going to delete it after the stream, so make sure you take advantage of it. This is wild to me. I honestly thought that we see at least a 50-50 or even leaning more towards a hike in September. Now traders are betting that the Fed pauses in September. Wow, this is wild. Let's see what they say for November. We don't have a FOMC meeting in October, by the way. November 1st, it's about a 50-50 split on one rate hike. So about 45% say pause or no rate hike in November 1st, and about 46.5% say hike in November, with 7.8% saying 2 hikes or a 50 basis point raise in November. So this is all over the place now, but it seems like the consensus is there's no rate hike in September. And then almost 50-50 on a 25 basis point rate hike in November, with 7.5% saying 50 basis point rate hike in September. This is crazy. This is crazy. I wonder if that's because of other Fed members who were talking a little dovish. Yeah, maybe. How many years to accumulate experience to become a pro trader? If you're talking to someone who's honest, bro, they'll tell you that it took them at least 2 years. At least. For me, it took me a little over 2 years. It took me 3 years to be consistently profitable. Like within, maybe because I already have a finance background, right? But within 2 years, I was proficient at trading. But proficient at trading doesn't mean that you are profitable, right? Like there's no way that I could have quit my job or any of that. But I was proficient at trading. I knew how to open trades, close trades. I knew about risk management, but I wasn't really good at executing it all the time. I knew about charting. I knew how to chart really well. I knew how to open advanced options positions like iron condors and vertical spreads. Like I was proficient at trading, but not consistently profitable, if that makes sense. So that didn't happen until year 3, if I'm being honest. And it wasn't until over a decade where I was able to quit my job, but I come from a different background than a lot of people. And some of you that have high paying jobs can attest to this. It wasn't so much that I wasn't able to quit. It's that the money from my job was too good for me to consider trading, right? Like I worked in Silicon Valley. So the golden handcuffs were too much of a draw. And maybe I could have quit sooner. I just didn't take the plunge. But certainly, like if the money from your job is not a draw, then yeah, you'll probably have an easier time quitting. All right, we just took out weekly highs, right? The market is down 0.4%. NASDAQ is down 0.65. The Dow Jones is down 0.2%. So the VIX is actually flat at 0%. Dixie is rocketing up. TNX, which is the 10-year treasury, is rocketing up. So the bond market so far is not believing that the Fed is actually dovish, right? If the bond market believed that the Fed was dovish, you would see yields dropping today, but yields are soaring. So the bond market is not believing the Fed right now. Would you prefer the Bay or LA? For sure, LA. For sure, LA. I didn't live in the Bay, by the way. I worked from LA for a company for a couple companies that's based in the Bay. Whoever donates $500 to Maui gets to take Z to Chipotle for lunch in West LA. All right, bro. Donate $500, and I'll match it, of course. Donate $500 to Maui, and we can meet up for Chipotle. That's incentive for raising as much money as we can for Maui. Yes, if you donate $500, we'll go to Chipotle. I can't beat a cash surplus every month right now, or else I would quit. Frugality and refining this craft is all I could do for now. Bro, I mean, whatever it takes. Yeah, I traded and worked alongside trading for over a decade, bro. Like, it's fine. Which one is your IG? It's the only one in the description. Just go to the description of this video and go to the IG from there. I see 2 of the same account. Bro, it's the only one in the description. There's no 2 accounts in the description. It's the traveling trader with a 1 instead of an I in traveling. See? Not Nostradamus. I told you we would take out weekly lows. It would be a tough day. How to trade from India? You can use interactive brokers. All right. Now what we're looking for is a potential long. But here, another piece of free game I'm going to give you. And we'll cover this in much more detail in the free mastermind on Sunday. So join if you want. There's hella people trying to impersonate you. Yeah, I know, dude. Like, I'm trying to get Instagram verified, but won't stocks crash if we go to lockdown in December? What the fuck? Bro, I don't know where you live. We're not locking back down in this country. I guarantee you that. There will be fucking riots, dude. And this administration is not trying to get unelected, okay? If we lock back down in December, then if Biden runs for president again, he's going to lose. Okay. So what we want to see is a clear market structure shift. See, you guys think this is magic. This is not sorcery. Not sorcery, just experience. What happened at the Beyonce concert? I don't know. I don't follow this stuff. Tell me. I'm using eToro. eToro is a horrible platform. Horrible platform. Just my opinion. I think you're much better off with interactive brokers, which regardless of what country you're in, you can use that. You and Don are the best traders I've ever seen and learned a lot from. I appreciate you. I don't know who Don is, but I appreciate you. And shout out to, I don't know. I don't know if he's a good guy or not, but shout out to Don if he's a good guy. If he's not a good guy, no shout out to Don. I heard they're writing legislation for masking. Where'd you hear that? On your Facebook page? Come on, bro. Took that long? Oh, wow. You front ran me. I didn't take it yet. But if you did, then that's a nice scalp there. Miguel Escobar donated $20. Appreciate you, Miguel. Donatello? Like the Ninja Turtle? All right. Let's see what's what. Let's see what's what, ladies and gents. This would be the epic long from here. Ah, it's going without us. Okay, cool. This nice impulsive candle here. We want this to stick. It's going to close in a minute. We don't want this to be a wick. We want this to stick. Eddie, what's going on, bro? Please explain the long. I don't know how much more I can explain it, bro. I've been saying, watch out for these liquidity levels. Watch out for these lows to be taken. But without a clear understanding of liquidity, it's going to be hard to understand why I would be looking for a long there. It's because this right here was the weekly low, and we know that there's a lot of liquidity that resides below that, right? Because institutions are going to be hunting for that liquidity. And so these are all retail trader stops, right? All the supply and demand traders, right? I don't know, whatever videos you watch on YouTube. All these supply and demand traders have all their stops here, and their stops just got taken out. And the market is now taking this long, and will likely, the market is just a series of taking liquidities, right? And I'm going to go over this in the mastermind, so you guys better join. But the market is just a series of taking liquidities. We took liquidity from the highs. We took liquidity from the lows. That's how you know whether to long or short. When does the meeting start? What meeting? This? 12 p.m. Eastern. I don't know what that is in Belgium. I would say 9, 10, 11, 12, 1, 2, 3, 4, 5, 6. I'd say maybe like, I don't know. That's probably 6 p.m., 5 or 6 p.m. in Belgium, 12 p.m. Eastern on Sunday. Just made enough from this stream for a few monthly Discord subs. I appreciate you. Russell Drool? I like that name, bro. That's a Batman reference. Russell Ghoul. But, yeah, nice play on the name. Which, by the way, Russell Ghoul is Arabic for the head of the monster or the head of the ghost. And Ras means head in a few different languages. I think it means head in Amharic, which is an Ethiopian language. It means head in Arabic, maybe Urdu and Farsi as well. Are you going to publish a recording in the academy? This one? Yeah, it's going to be on YouTube, bro. Yes, this is considered an MS shift. In Tunisian Arabic? Yeah, bro. Tunisians speak Arabic. There is no Tunisian Arabic. Arabic is Arabic. There's different slang dialects. So, yeah, there's definitely a Tunisian dialect in terms of slang. But proper Arabic is the same in every country. Yes, it's head in Amharic, Rob says. Yeah, because of, I know that because of, people don't know where Rasta comes from, right? But it's Rastafari, who was an Ethiopian leader, right? Uh, and Ras means head. Now he claimed that he wasn't the Messiah, but when he visited Jamaica, they all were like, "Oh, this guy is the leader of the original people of Earth," because the original people of Earth likely came from that region of the world, right? East Africa, Ethiopia, Eritrea. So Rasta comes from Rastafari, which Ras in Amharic is head. Haile Selassie, exactly. Oui or no? For what? For and yo. Yes or no on what? Aisha says, "Oh, in Urdu they flip it. Sar." Aisha, are you Pakistani? You don't have to answer if you don't want. Je suis Tunisien. Okay. Well, that wasn't Arabic. Welcome to History Lessons Whilst Trading. Yeah. I would be looking to go long here. Now, I'm not hyper confident in this long, but the fact that VIX hasn't really spiked. Dixie is up, which is a dollar index, but if you take a look at it, it is dropping. So if we can get a drop on the dollar index, and by the way, this is stuff that we cover every single day, like literally every single day, not just once every 2 weeks when I stream. If we can get a drop in Dixie, then I'd be confident in this ES long from this level, for sure, for sure. My long would look something like this. And by the way, you can use SPY calls or SPX calls, but again, options pricing is not going to be as precise as futures pricing. This right here would be a 2.5 to 1 long. And I would not mind it. On a day like today, you do have to be careful because the market can go against you for sure. But I would definitely consider taking this long here. Let me see, 43.74. And then 43.69.75. All right. Paris, mais je suis Philadelphie. All right. Je suis à Paris pour le moment. Oh, that's one of my favorite cities, bro. Z, are you looking at the big fair value gap to get back long on ES? Yes. Although the golden pocket does reside a bit. Oh, you know what? Actually, I drew it wrong. Sorry. Golden pocket is right here. Now, if we can get a long to VWAP, that would be awesome. Let's see. I would have much rather seen this break first before going long, but because we are up on the day, right, we're playing with house money here. So I can sacrifice some of the gains in order to take this trade, especially on a 2-to-1 trade with a fairly tight stop. I don't mind sacrificing. That's how you compound, right? Now, if I wasn't up earlier, then I might not take this trade. If I wasn't up earlier, then I might not take this trade, because on a day like today, you won't get a ton of clean setups, or you might get clean setups, but what you don't want to happen might actually happen, right? Why not long from the GP? Yeah, I mean, the GP is right there, bro. The GP is right here. And what you could do is set up a long here and set up a long at the GP to average out your price. If you set a long at the GP and you really want to get in the trade and it doesn't hit the GP, then you might be asked out of your trade, right? So what I like to do sometimes is scale in twice, right? Like once at the 50% of the fair value gap, and then once at the GP. And that way you can average out your entry price, if that makes sense. So yeah, there are many different ways to cut this, right? Like you don't, there isn't one way. It's just, it depends on your risk tolerance. Z's French is on point. All right. Let's see what happens here. Well, I could close this out. We're up $100 per contract. And I'm going to set my stop limit to break even really quick. If we can cross above here, I'll set my stop limit to break even. Why? Then I'm in a risk-free trade. And now the worst that can happen is I lose $0. And the best that can happen is my target hits, right? But I just need to break a little above this candle here in order to do that. I can't put my stop limit at break even here. My stop limit is right here, right? But I can't put my stop limit at break even. Are you a nomad? What do you mean? Like do I travel around? Yeah, it's in the name, bro. Sold half for 200% profit already? Oh, you front ran the liquidity. Nice. Do you trade live every day? I trade live every day here. I trade live every day on the Discord. All right. You know what? I didn't even check on other equities. Ooh, Tesla looks hella ugly today. All right, guys. I'm gonna continue trading with the Discord, so I'll be on here. I'm gonna expire that coupon code right after the stream. So if you want it, use code Jackson for Jackson Hole. It's the first link in the description. And then I'm gonna I'm gonna continue trading with the crew right now. So I'll see you guys there if you join. Gonna continue to monitor this. Gonna move my stop limit to break even if we get above 43.8675. And yeah, we'll see what's up. But appreciate you guys. I'm gonna match your guys' donation. So thank you so much for donating to Maui. Appreciate you guys. And yes, whose ever suggestion it was to donate $500 and we would have Chipotle together. Yes, do that and I will match it. Salim hit me up on Instagram for your free hat. Or no, not Salim. 2-1. Hit me up on Instagram for your free hat. And yeah, how much to continue watching you trade? Bro, I trade on the Discord every day. There's a place where you can watch me trade every day. So come through on the Discord. And thank you guys so much. Thank you for the donations. Love you guys. I'll catch you guys on the next stream. For those of you in the Discord, I'll see you in there in a few minutes. Peace. Oh, join the free mastermind too on Sunday, August 27th. That link's in the description as well. All right, peace.